I think the work opportunity tax credit is a very, it's been a credit that's been around for a long time. It's been around for over 20 years now, but it's been really widely underutilized by especially small business clients and taxpayers. The big companies all know about it, and they're really going after getting those credits, but the small business community has not embraced it and hadn't taken the time and realized how effective it can be for significantly reducing your tax. And Brian, you might want to talk a little bit about what it is. I guess we ought to explain what is the work opportunity tax credit before we go further.
Right. It's an incentive from the federal government to hire people in certain targeted groups, people that have been on public assistance, on food stamps, on welfare, certain ex-convicts,
Veterans.
and certain veterans, unemployed veterans. And generally it works out to be a credit of up to $2,400 per employee. It's a percentage credit based on the wages with a maximum of $2,400 most of the time. Although in certain situations it can be up as high as $9,000 or so. But it tends to be very useful in businesses that have a fair amount of turnover, people that hire a lot of fairly low-skilled workers. Historically, it's been big in the nursing home industry, in the fast food industry, other places where there's a lot of people that are being hired that are in these targeted groups.
I think it's a real benefit for a number of taxpayers that's been overlooked, and they can significantly benefit from this credit, not deduction. It seems to be that somebody with about $100,000 of wages is who's within this targeted group may have about $5,000 of credit.
If they're in the industries that hire those lower income wage earners.
Correct.
Yeah. Yep.
Yeah, and the key thing on this is that it's not something that you go to your accountant with at the end of the year and say, hey, do I qualify for this? In order to get the credit, the employee has to be certified as eligible for the credit at the time the application is made. If you've hired the employee and you haven't gotten the certification yet, then you're not eligible, or you've not applied for the certification, you're not eligible for the credit on that employee. So it's something, if you think it affects you, you need to look now, and you need to look at it before you start hiring people.
And with a little bit of assistance or help, just with your accountant, acting now, it really doesn't take a lot of effort for employers to get that certification to qualify their employees. It really doesn't take much time. It doesn't take much time of your HR department or whoever's doing the hiring process. It's really a simple process. It's just the fact of making sure you do it and make sure you get those couple of forms done so that it can be sent in and certified. And then like I said, I'm not going to turn down $2,400 of tax credit for the government just because I was going to hire that person anyway. So it's a pretty good deal.